What's going on, everybody? It's Rod with Pow Group. Welcome back on the Pursuit of Wealth, your home for MJ Stocks, crypto assets, news, and interviews. It is Tuesday, April 22nd. Hope you're doing awesome. In this video, we're going to do an update on Canopy growth. We'll take a peek at the chart as well. I'll give my thoughts and opinions on the price action. I'll look at the technicals and again, give you my thoughts and opinions. But as always, just my thoughts and opinions, not financial advice. This is for entertainment purposes only. And full disclosure, I do own the stock in my portfolio, and you should never buy or sell anything based on anything that I say. But yeah, reverse split, timer reset today. A lot of questions, people messaging me, is Canopy Growth going to do another reverse split? And a lot of requests for this video. So we'll dive into it here. Before we do, make sure to smash the like, all that good stuff. And if you're new, you can subscribe, take the bell. You'll be notified on any future videos or when I go live. And you can follow us over on X, formerly Twitter. Handle for that is @GroupPow. Going to be using that as my platform of choice going forward. All right, jumping into the chart here on the 4-hour time frame. So you can see we closed the day today at 118, and we've been hovering right around that 118 to 120 area. And that was actually a 4-hour bull flag target that we had on CGC. So you can see here we had our low, high, brief high or low, and bull flag that confirmed. And then you just take your measured move there with the trend line tool, and that gives you your measured move out to about 121. And we had multiple closes in that area. We closed at 122, 118, 121, 118, and then we broke down. But you can see with these upper wicks, we overshot that target a little bit, but you can see that that was a very basically busy area on the chart, right? So that target that we had at 121, that's where all the real candle bodies essentially were basically closing, and now we're seeing this candle here on the 4-hour time frame at closing at the high, more than likely due for a bit more upside into tomorrow. We've been seeing some positive momentum out of Washington and different bills being introduced, but again, the whole sector just won't believe it or won't care until something actually gets done, whether it be rescheduling, 280E actually gets enacted, or we get safe banking that actually gets signed into law, and it's not just progress and hopes and dreams, right? Yeah, this new administration, promises made, promises kept. I think we're going to see them follow through on this, and we'll see what Congress can muster up as well. But we need something concrete. It can't just be little small wins here and there. It has to be a big win solidified. So as of right now, 4-hour time frame. We might be due for a 4-hour downtrend here. So if we do form a lower high and a lower low, we'll look for some daily consolidation. And we're daily inside bar here today. We had the high at double top at 119 there. High of the day today, same as yesterday. We had multiple targets of 77 cents. We had a bear flag. We also had the descending triangle. And we actually hit that rate on the money, 77 cents. And as you can see, we were also forming some bullish RSI divergence here on the daily time frame. So we had higher lows and higher highs on the on the RSI. And on the price action, we had lower highs and lower lows. So that's called hidden bullish RSI divergence. If we were to invert the chart, it would be the opposite, right? So if this were inverted here and we had a sloping, if the RSI was coming down like that and we had higher lows and higher highs, then that would be a hidden bearish RSI divergence. But in this instance, it was bullish. So this is what generally happens. Nothing goes in a straight line down forever. We had multiple targets of 77 cents. That's exactly where we hit. And then, like I said, we were coiled like a spring, definitely due for a relief rally. And then off of the low, we rallied about almost 70%. So that is some massive volatility, but to be expected when you're this beaten up. You can easily pop 50, 60%. And we're basically just back to where we were in March. So resetting the timer, if they were to close below $1, so if they go back below $1 again, it's possible that they may have to do another reverse split, but it has to be 30 days below $1. Essentially, when they close the day today, when they close the day today, back above $1. Yesterday, we closed at 108. So that's 2 days in a row now. Actually, 4 days in a row. Yep, that's 4 days. So overall, it's looking pretty good. This could be an inverse head and shoulders here forming as well. I'll just draw that out. Just saw that. You can even draw it like this. So we'll see if we get daily consolidation and a 4-hour downtrend into tomorrow. But 75 cents, that would have been an awesome trade too, just playing off that bear flag target of 77 cents and then 75 cents, like a logical setting your stop at like 74, 73, and you could have nailed the bottom there. And like I said, that bullish hidden RSI divergence was the kicker and the moneymaker. So it's looking good on the weekly time frame. We're seeing some signs of life here. We're bullish on the MACD, the stochastic head of bull cross as well. We just need to get two, preferably three candle closes over that 10-week moving average, and we're more than likely going to see a massive move. Like, look how far away we are to these weekly moving averages. The closest one nearby is the 50 weekly at 423, and we're topping out here. We're banging our heads at the 50-day moving average. So that's being resistance, has been resistance for a while, and that was at 124. So if we can get over that, again, two, preferably three candles, we're more than likely heading back towards our daily moving averages as well, which, again, unless you think the stock's going to go to zero, it generally gravitates back towards these moving averages, right? So if you get extended to the upside, we come back down, test it as support, flip it into resistance, test it again, and then eventually, right, it gets weaker and weaker. It's like trying to knock down a wall, right? You run into a wall, it weakens it a little bit, and you run into it again, and again and again and again. Eventually, the wall falls down, right? So that's basically what we're up against right now. And if we were to see the 100-day moving average come into play in the next couple of weeks, we'd be back up to around $2, and then the 200-day moving average at 371, and that brings us up to the 50 weekly there at 423. So it's more than likely going to be news driven, I would think, for the whole entire sector. But it could have to do with these new bills that are the states 2.0. You've got the Prepare Act. So there's a lot of, like I said, there's a lot of momentum, there's a lot of chatter, there's a lot of bills, etc., progress, but we're not seeing anything concrete. So in order for this whole bear market to be two things has to happen. We have to confirm monthly uptrends across the sector. I've said that a million times, but we also need some sort of win, a big win that's concrete, whether it be safe, rescheduling, uplisting for the US MSOs to the NYSE and the NASDAQ. That could get us there as well. But we need one of those things to actually happen. And then I think the sector will explode. If we see excise tax in Canada improved as well, we'll see what happens. We have an election here coming up in just under a week on the 28th. So we'll see who the new leadership is, and if they come in. I'm pretty sure that both sides of the aisle are very anti-tax at the moment. So that's a good thing, that they could potentially come in and work with the industry and try to switch that burden on Canadian licensed producers and try to help them a little bit more with their bottom line and not paying as much in excise tax. If that were to happen, oh man, it would ignite this sector like you wouldn't believe. That could add, to some of these companies, maybe not CGC because it's been dwindling in market share, but some companies could stand to benefit $100-200 million in annual off of their annual earnings, right? So that's an extra $100-200 million essentially going back to these companies' bottom line. So that would be huge, especially compounded over a few quarters and years. Something that we have the highest excise taxes of anything in the world, I believe, in Canada for MJ. So it has to change at some point. Like I can't see them leaving it this way forever. And there's been tons of bankruptcies, tons of CCAA filings. It's just not good, right? You never want to see that in any industry. But we have a lot of work to do. Like I said, we still need to see something concrete, and we still need to start the monthly bounce, form a high, then a higher low, then a higher high. And we have to do that not just on Canopy Growth, but on all our names in the sector, right? ETFs, retailers, producers, Canada, US, you name it. When 80 to 90% of the sector is in monthly uptrends, then I think we're gonna see a bull market like you wouldn't believe, because we've had the most brutal of bear markets. So on the monthly time frame, we would need to break the high of last month at 142 to start the monthly bounce. But we essentially have no monthly resistance on CGC until 1492. Like each monthly candle, you can see we had a small bounce here in the month of November, where we went from like 547 to 580, but not a very big bounce for a monthly bounce, right? Like that's peanuts. And really, since then, we haven't bounced on the monthly. So you could say the nearest resistance on the monthly time frame would be up at 580, and then after that, nothing until 1492. So like I said, once we start this monthly bounce, it's going to be a massive one in my opinion. It could potentially be a bear flag, but I'm not expecting that to be the most likely scenario. But again, as always, we will continue to check in with the charts, because all of this, we get new data. The charts change every day and every minute, really. So we have to keep checking in for clues. And as of right now, it's been a nice relief rally, but I wouldn't be surprised if we continue to range for a little bit longer. Big tech, AI, crypto will continue to steal the show, I think, for the next few weeks, if not months. And then I think we'll see some rotation out of those sectors into MJ and some news and progress with regards to the US and reform there over the coming months. All right, going into there, it's Rod with Powell Group. Thanks again for joining us in the Pursuit of Wealth. We'll check in on the Canopy growth chart again soon. All right, see you on the next video.